Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 22nd COT report of 2018. Before I start the review, I'd like to remind you about two new services that we have. The first one is futurestradingguides.com, focusing on futures markets obviously, and the second one is FX, mainly dealing with forex markets. If you haven't yet checked these out, please do so. Thank you. Let's start out with the review. And opening the first chart, we have the rough rice on top of our list with a 32% change in commercials positions. You can see that change being much greater than average. It's actually, I would say, the largest change in the past 52 weeks. And you can see that we had a pretty decent change size back over here in 2017. Roughly in November, and you can see that was just before the market bottomed out, and then we saw a significant rise in prices. So traders are again shifting their positions pretty dynamically, as you may see. Commercials have just gone above the zero line, large speculators below. So this is a very decent size COT change signal, suggesting prices may start moving upwards. Opening a 5-year chart, you can see the COT Extreme, which was actually bearish a few weeks ago, and you can see that the price did top out, and we can see a bit of a decline since then. And we're getting closer to bullish extreme levels now. Obviously, as you may see on this 5-year chart, especially back from 2015, we have had even greater, much greater extremes on the bullish side. So this extreme could widen, which means maybe in the near term, due to this significant COT change signal, we could see a bit of a rise in the market. But in the medium to long term, there's a good chance that this trend, this downwards trend may continue. Let's move on and have a look at the lumber market, where we have a 21% change in commercial positions. You can see that change size over there. Again, this is much greater than average. It's a bullish COT change signal, suggesting prices should go a bit higher early next week. And jumping to the 5-year chart, you can see the extreme, which is definitely still much closer to the bearish side of the market. And as you can see, in the past 2 weeks, we have had a bit of a decline in the market. So we're not surprised about that. The big question, of course, whether this will continue. Would we see further declines coming, which of course would mean that this was the extreme that pushed prices down. The next market is sugar, where we have a opposite change signal, a bearish COT change signal, both in commercials and large speculators. You can see we have 20% changes. Again, decent sized changes, but of course from the previous COT report, you can see that the COT change signals many times do not take effect in the market. And you can see there was absolutely no reaction from the market to the previous bearish COT change signal, which means you have to be cautious about these signals. But if we open the 5-year chart, we also get the answer to why the market did not react. And the reason is because there's a very large stress in the market, a very large bullish COT extreme, which, as you may see, possibly has influenced the market, pushing prices higher. This could be the end to this downtrend that we have. And as of course prices are going higher, we shouldn't be surprised to see decent changes in traders' positions. Moving on to large speculator COT Extreme, we have the Swiss franc on top of our list with a 569 report extreme. We have been talking about the Swiss franc in the past couple of reviews. The bullish extreme in the market simply increased to even greater levels, further supporting what we have already seen in the market in the past few weeks, that there's a bit of a rally happening in the Swiss franc against the US dollar, as you can see. So this report is suggesting this trend can continue, and we might easily see higher prices coming in the near, medium, and possibly long-term future. Lean Hogs is our next market with a 314 report extreme in large speculators positions, 450 report extreme in commercials. So pretty decent COT Extreme over there. Unquestionably the largest on this 5 years chart, as you may see. This is of course a bullish COT Extreme signal, and you can see how well these bullish extremes shifted the market in the past. Now we already see a bit of a rally happening, which is of course similar to the Swiss franc in respect that the extreme is widening, although the market has started reacting to the extreme that was present in the market for the past couple of weeks now. And last but not least, let's have a look at the Chicago wheat with a 288 report extreme over there. In this case, we are talking about a bearish COT Extreme signal that is suggesting prices should continue what they've been doing this week. You can see there was a decline. If we look at the past, you may see this is from mid-2017. We had this change in traders' positions, commercials going net short, large speculators net long, and that was just after we reached this top. So again, a beautiful example, and there's a few more that I'm just showing to you which indicate that there's a very high probability to see this signal being effective again, and of course that would mean we should see declining prices coming in the Chicago wheat. So that was all for this review. Of course there's a lot more to analyze, but you have to check out our service, COT Base, to find out lots more. I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Goodbye.